Hi everyone, welcome to our next slide, which is candlesticks. So here we'll be learning about candlesticks, right? These tiny little things, I will show you these things. So this is what we call a candlestick. So we have what we call two types of candlesticks that you are supposed to know. So these are two types of candlesticks, right, that you can see here. So there is a positive candlestick, which means green. Most of the time you see a green candlestick, and a negative candlestick, which is a red candlestick. So green candlestick, it represents the power of buyers that are coming in, right? So we are saying it represents a bullish market, and this one a bear market, where we are selling sellers, they are coming in. These are for sellers, right? Which means it's a negative candlestick. A positive, which means a buyer's candlestick. The buyers are coming in, they are seeing the price, it started at an open price, right? At an open price, then the price was pushed up, it ended up closing at a higher price than the opening price. So at a given price action trade, right, let's say a day or a certain time frame, right, whether it's a day or a 30 minutes or whatever you think you might want to trade, right, it's just a session. So it shows the movement of price within a trading sessions, right? So let's say it started at $20, the opening price was $20. Before we move in explaining this candlestick, they are comprised of these things that you are supposed to know. It comprises of an open price, close price, high price, the highest price that the a session went to, right, and a low price, the lowest price that financial product in that certain time frame it went to, right? So there are four things that we are supposed to high, close, and open. So we explain what the opening price. In opening price, you are saying a given time frame, let's say as trading in a 30 minutes time frame, right? The time frame it opened, then the price was at $20, right? But as the time moves, right, the price was pushed up, right, and it reached a highest price, right, the highest price. So but at some point sellers come in and push that highest price, and maybe it end up closing. This is the closing price. At the end of the day, the price it closed at this, maybe at $15, right? So at some point it can open at $0.20, as we said, right? Then it closes it can go at the lowest. What happens is, like, there is a fight between bulls and bears, sellers and buyers. So that's why this price fluctuates at a certain time frame, right? So it can fluctuate to, and it goes to a lowest price, which are these shadows. These are what are called shadows. These little tiny things that you are seeing, these are shadows or wicks, right? So it's the same thing, right? It opened, if it's a red candlestick, it opened at a higher price, which means maybe $15, then it closed at a $20, right? That's what we call candlesticks, right? So if you go to our trading view, you can see these little things. That's what we call, let me zoom in, these little things, that's what we call candlesticks. You see these little red and green candles, green things that you are seeing on a chart. These are what we call candlesticks, right? So if you place your mouse here, you can literally see the opening price. Just go above here. If you come here, it shows the opening price of a candlestick, the last opening price. So if you come and put your mouse here, at that point on top here, you will see the opening price was at the opening price of this pair was 0.7086. The highest, their price that above. So as you move your mouse, each and candlestick will be giving you the highest price, opening, closing price, every detail, right? So this is in a 4 hour. So if you go to another time frame, right, this opening price definitely will change because the session is also changed, right? So that's what I'll call candlesticks, right? So these candlesticks, they are like humans in general, right? So they are like humans. They have what we call different board sizes, right? So the different board sizes, they also talk about if someone has got his buff, which means it talks about the eating side of that person. If you're slim in general, if you're fit, it shows that you care about your diet. So that's the same thing with candlestick. They show us, they describe something that is happening, right? So in terms of candlesticks, right, you can have small bodies, large bodies, like what you can see from here, right? So long bodies, they indicate that there is a strong buying, right? If you see a long body, right, you should know that if it's a green, that's why you see I end up putting a color here. It doesn't matter if it's a green for buyers. It shows that if there's a long body, it indicates that there is a strong pressure of buyers that are coming in, right? A strong pressure. If it's a red body, but if it's long, which means there's a strong momentum of sellers that are coming in. So it gives something, it describes. So the longer the body, the more intense the buying and selling pressure, which means that these people that are coming in, they have more intense pressure, right? So what about these short bodies? This implies that there's a little intense pressure of buying and selling activities within that trading session, whether it's in 1 hour, as I explained, 30 minutes, depends whether you are, right? So in forex lingo, bulls are called buyers, as I explained. If you hear saying it's a bull market, we are talking about buyers market. There are more green candlesticks that are coming in. So maybe we have green candlesticks that are coming in, they are coming in like this, so which means there's a strong momentum of buyers or bulls that are coming in, right? It's a bulls market. If you hear people saying bears market, they are talking about these large red candlesticks that are coming in to say there are more sellers that are coming in the market, right? So be very careful with these lingos. So shadows, these are upper and lower, as I explained, these are shadows. So they give us a certain clue about the trading session, right? To say what was the highest price that was reached, what was the lowest price that was reached, right? So a long shadow, right, if it's a long, like you can see here, it shows that the trading occurred well past the opening. Most of the trading is people were trading above the closing and opening prices. Most of the trading session was done outside between the opening, right? So most of the confined, that's what we are saying, right? So the most important note that you need to understand from this is, if a Japanese candlestick, right, is a long upper, long upper, as you can see, this is a long upper candlestick, right, and a shorter lower shadow, what does it depict, right? It shows that the buyers, right, flex their muscles. So we are saying it opened here. Let's say this is a green candle, don't mind about the colors, it's a blade, but let's say it's a green. So we are saying it opened and closed here, right? So we are saying buyers, they flex their muscle. So what we are saying, the people, these buyers, they come in, right, and push the prices up, as you can see, but they are just flexing because the price at the end of the day was end up closing nearly the opening price. So that's why we say they flex their muscle by pushing the bid price up. We've explained about bid price. So for one reason or another, sellers, they come in. So we don't know, but maybe there are a resistant line here, a liquid position. So at the end of the day, maybe buyers, they end up coming, pushing that highest prices down, and it end up closing at this closing price. So generally we are saying it flexed their muscle. So what is the opposite? We are saying if it's a red candlestick, right, if it's a red candlestick, like here, let's say this is a red candlestick, right? If it has got a lower long shadow and a shorter upper shadow, it means that sellers, they flex their muscle, right? So we are saying it opened here maybe $1.15, then the price was pushed down maybe to 80 cents here, 80 cents. But at some point, buyers, they end up coming in and push these prices up and close nearly the opening price and close maybe here, right? So we are just saying these buyers, they flex their muscle because they push that price. The sellers flexed their muscle, they pushed the price down, but it ended up closing nearly the opening price. So people are just flexing in the market. That's why I'm saying bulls and bears, they're flexing. So you really need to understand candlestick because they help you to understand what's happening in the markets. So these are large green candlestick, as I explained. It shows that there is a big momentum of bulls that are coming in or buyers that are coming, pushing the prices up. So you need to understand about these things, right? So let's go to our next slide.